So one scenario I get so often with clients is I've got a company and I want to transfer out the motor vehicle that's in the company. Now that could be because you're closing the company, or maybe even you've got a car in the company that still has a lot of value in it, but you don't want in the company because you want to replace that. I don't know. Whatever the scenario is, it doesn't really matter. But the question is, how do you go and do it? Now, it's not as simple as just going down to Service New South Wales and just transferring the vehicle. Let's assume that there's no finance on the vehicle. So just when you buy any private vehicle from someone else, you wouldn't buy a vehicle with finance on it. Now, the thing is as well is that because you have a company and because you are an individual, we need to basically remember that they are two separate operating entities. So let's like saying there's two people in a room, right? There's you and your company. So that means that whenever we're going to do something like this, we need to treat it at arm's length, which means we need to basically have commercial terms. So if you're going to transfer the vehicle out, the first thing we need to do is we need to get a value of that car. Now, how do you get a value? Now, you could go to something like Redbook. I probably would recommend something a little bit better than Redbook to give you a valuation that's online, but it's a good starting point. But the next thing I'd do is I'd probably ask maybe a car dealer or someone in the finance game understands cars, motor vehicles, the cost of them, maybe someone who buys and sells cars, to put a value and to write down what that is. And the reason you need that, and the reason that's so, is because you need to be able to substantiate to the ATO that you've done that arm's length transaction. So, okay, then what is the true cost to you as the company when you transfer that vehicle out? Now, with most clients, especially with the last few years of depreciation, there's a lot of motor vehicles or assets that you've had that you've been able to depreciate 100%. So in this scenario here, we've got a car at 46,929 and it's been fully depreciated. Now that means that in the books, we've claimed all the depreciation and the value on the books, the written down value claimed is zero. But that also means that when you go and sell an asset, that you're now claimed depreciation, but now you're getting money in the company, so therefore there's an actual gain. So in this scenario here, when you go and sell the vehicle, I'm assuming you're registered for GST as well, you're selling something, so you're gonna have to include GST. So let's assume that you got your valuation, it's 24,200 is what the car's valued at. Now, 1/11th of that would be GST, so you would include that in your next BAS. Now the next thing is the difference between the 24 and the 2,200 is 22 grand. So that $22,000 is now assessable to your company. So tax at 25% would be 5,500. And then the total cost of the company is going to be 7,700. Now there's other costs as well. I'm going to do another video on this. But guys, these are the considerations you need to think about when transferring a vehicle out of your company to your own name. Any comments, questions below? Leave them below. Thanks guys.